Hello and welcome to Startup Street. I'm Arundhati Ramnin, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. Nexus Venture Partners closed $700 million in a new fund through Nexus Ventures' 7 fund. The VC firm will invest in India and US-based startups and in sectors like AI, SaaS, fintech, and commerce.
The tech industry's revenue in India will breach about $245 billion at the end of FY23, NASSCOM said in its latest report. The industry grew at 11.4% in constant currency terms. The tech industry is a net creator of jobs, with 2.9 lakh being created in FY23.
Mumbai Angels invest 3 crore rupees in Judge Safety, a safety innovation company focused on smart safety wearables. The pre-seed funding round also saw participation from angel investors and others. Judge Safety will use the funds to expand its sales and marketing outreach as well as its product portfolio.
AI and automation as a service platform Ease My AI raises 1.8 crore rupees in a seed round led by Inflection Point Ventures. The funds will be used for product development and working capital. The firm also has filed a patent for an AI-based operating system.
Fintech unicorn Razorpay's net profit widened 20% to 7.3 crore rupees in FY22 from 6.1 crore rupees in FY21 due to a strong growth in its business. The startup's revenue from operations surged 76% to 1,481 crore rupees as per filing source from Tofla. For every rupee spent by Razorpay on advertising and marketing, it earned 17.3 rupees in operating revenue.
SoftBank Group is planning to sell its stake worth around 600 crore rupees in Delivery. Sources have told CNBC-TV18 SVF Doorbell, an entity of SoftBank, is looking to sell 3.4% stake in the company at a floor price of 335.10 rupees per share.
The European Parliament has banned TikTok from staff phones, following in the footsteps of 2 top European Union policy-making institutions. The ban, starting from March 20th, will apply to corporate devices such as mobile phones and tablets, which are enrolled in Parliament's mobile management application, a Parliament spokesperson told Reuters. Those were the headlines that we're tracking for you this evening, but onto a CNBC-TV18 exclusive. New age matrimony platform Betterhalf has bagged $8.5 million in a Series A funding round. Finsight Ventures and other marquee investors like the co-founders of Instagram and Dropbox participated in this round. Betterhalf envisions building a super app unicorn for Indian matrimony and offers a full-stack tech-enabled wedding services as the company's growth pillars. Joining us now to discuss the fundraise and the growth roadmap is Pawan Gupta, the co-founder and CEO of Betterhalf, and my colleague Ritu Singh. Pawan, first of all, congratulations on the fundraise. You're announcing it right now first on CNBC TV18. You essentially connect new age couples. How are you different from the rest of your peers? Talk to us about how you set yourself apart.
So let's understand the product first. Betterhalf is India's first and only marriage super app for urban Indians. Matrimony industry in India were built by traditional matrimony sites online that was largely done by parents. It's very sales ops driven. But what Betterhalf did, we were able to create a horizontal experience for these urban Indians to power their marriage journey, right from marriage decision making to courtship, which is astrology and verification services, to wedding, where you can book photographer, decorator, venue, bridal makeup, mehndi. And this paid user retention, we have been able to prove this theory that now they spent over 2 years in the app. This is the first unique, I think, invention that we are able to do it in this industry, largely not just in India, but globally. Now we are seeing repeat sales. The same consumers have been buying more and more products from us, and we are more committed to power this journey where they think Betterhalf is the one-stop solution for them for all their marriage and wedding needs.
Hi, you've raised about $8.5 million. How would you be using the proceeds from this?
So the first thing is the future bets, for the company is building the wedding marketplace. Or one of the products is launching shortly. So we'll be investing heavily into building the marketplace for venue booking, decorator platform, photographers, bridal makeup, mehndi, entertainment artists, and so forth to facilitate a hassle-free process for these urban Indians. To do that, we'll be investing again significantly into our branding activities to drive more organic growth for the product adoption. So these are key goals for the company over the next 18 months on the investments.
You also recently launched your new service app, which is Astro Zodiac. What's the traction that you've seen for this? How has it helped boost your user base?
Yes, so very interesting question. So first of all, we would like to try and provide more products within our super app experience. So the top two, Astro Zodiac is India's first astrology product where these urban Indians can talk to recognized and certified astrologers. And these are qualified, highly experienced, where the counseling part is very strong on the love, relationships, marriage, and career. This is what we're doing in our main app itself. We're also able to build a separate brand powered by Betterhalf, for these audience to power more and more products, which will be largely focused on astrology as well. So that's, I think this was launched 2 or 3 months ago. We have overall, we have over 5% of our users driving the sale of the astrology, which I think over time will continue to power more and more cross-sell to our users.
All right. You have about 1 million active users on your platform. How many success stories have you seen? How do you plan to grow your user base even further? And how much do you earn per user?
Okay, so I'll share this. So first is, as a company, we have driven over 5 million connections or matches on the product. We drive over 300K matches on the product. Overall, as a company, we have done over 15,000 marriages. The last time we announced pre-series A round, it was 1,000 plus matches. So I think huge growth that has happened over the last 15 months. Now, I think I can talk about the LTV per user. This is close to $50 that we are doing, which is unseen of in the Western world. And that's at par at the highest that we see in the industry in India. I think going forward, it's only going to be more and more LTV growth that we have been able to prove so far, and we'll continue this execution on building another 20-25 products. And it would look like overall Amazon for Indian weddings, on the long term, as the product evolution even becomes stronger over time.
Right, so you've driven 5 million connections, as you said. Now, you launched in 2019 and you've seen a 2x jump in annual revenue in just 6 months. Where do your revenues currently stand? Where will the next leg of growth come from for you?
Okay, so we are at 200K of monthly revenue at this point. Based on the company's financial plan, we are looking to hit 1 million monthly revenue or beyond 10 million annualized revenue over the next 18 months. Exactly that sits with our Series B round. The revenue today, it's most revenue, so 70% of our revenue comes from matchmaking and 30% comes from cross-sell. We think that by the time of 18 months, this will be an even split of 50-50%. And over time, in very long term, I would say matchmaking will become an user acquisition tool, which will continue to run profitably that we're doing today. But having said that, the majority of the revenue in long term will shift towards wedding.
All right, and you also claim to have invented the fastest matching US patented technology that connects users with matching profiles in one click. How does this tech work and how fast does it connect people? Any new services in the pipeline?
So the tech continues to be the core backbone of what we do. We are inventors of single-click matching technology. So we hold a US patent, my co-founder and I. The way it works, for any user who shares their name, gender, date of birth, we are able to create their religion, community, language, their partner preferences. And this tech was built through our first 1 million of matches, actually about 2.5 years ago, before the patent was filed. And now, when we have deployed this to over millions of users over the last 2 years, which has been proven tech now, our onboarding rate is 2x of our competitors. And that's what gives us a good advantage in a significant, I think, a competitive way for us to bring more and more inventory and database to even strengthen the matching. That's on the user acquisition side. And the second is huge investments inside the company goes on advancing our matching algorithm, where we optimize on per user level the volume of matches and quantity of matches, so that the coverage per user is very high, and they end up making between 6 to 10 connections a month, which in the industry they're doing 1 to 2. So that is, I think, the more investments will continue to go in terms of our company's efforts on advancing more data stack, and that's what will lead to more and more inventions.
All right, Pavan, thanks very much for joining us here and giving us your time here on Startup Street. Now, moving on, Tata 1mg-backed digital diagnostic platform 5C Network has announced the acquisition of Krayen Inc., which is a startup that is focused on healthcare applications as well as AI models, which detects ailments in X-rays and CT scans. Now, with this acquisition, 5C Network aims to double its digital scanning services and targets almost 1 billion scans per year by 2025. To talk to us about this deal and what it means for the company, joining us now is Krayen Sivaselam, who is the CEO of 5C, as well as Bhargav Subramaniam, who is the co-founder and CEO of Krayen. Bhargav and Krayen, both of you, thank you very much for being here with us. Krayen, if you could start by telling us, what is the size of the deal? You haven't announced that yet. And what does Krayen bring to the table for you?
First of all, Arundhati and Ritu, thank you so much for having us on the show. We purposely didn't announce the size of the deal for multiple reasons. The biggest one being that for us, it's the future of and what we can build together that really matters. The capabilities that Krayen brings in terms of their deep expertise in data engineering, machine learning, and artificial intelligence are so high that we think that most of the value is, just yet to come. Bhargav and I have been close friends for a long time, and I'm just extremely excited about the opportunity to work with the team at Krayen. We have already built out some significantly high-level artificial intelligence that detects, for example, hemorrhages in CT scan of the brain, almost a complete automation of chest X-ray reporting for our radiologists. And really, in our discussions with Krayen, we realized that this is just the very beginning of what we could do together. And so at 5C, we are not an income-driven organization. We are an outcome-driven organization. And so we are just unbelievably excited to work with the Krayen team. And personally, I'm very lucky to have an opportunity to work with this brilliant team led by Bhargav.
Right. Bhargava, let me bring you into the conversation. Now, Krayen builds ML models in healthcare. What is the road ahead looking like for the space? How do you plan to employ AI and ML to create applications and models?
First of all, thank you so much for having us here. So we have seen the application of AI in multiple use cases, specifically with generative AI. We've seen examples with ChatGPT and multitude large language models, LLMs, that's called. Now, that has tremendous potential in a very focused diagnostics and in radiology. So we are using this. So for example, if you look into it, at 5C, it's been around for quite some time, and we do a lot of scans every single day. It brings us two things. It brings us a wealth of knowledge, and it also brings us tremendous amounts of data. And this helps us build some amazing set of roadmap using both generative AI and specifically focused on diagnostics and radiology. Specifically, one of the things that I probably, I want to don't want to get into the specifics we haven't announced yet. I also want you to call us later on. But one of the things that we're doing is we're building some very specific AI-focused stuff for a very prevalent disease, where even on early pilot, we have seen 95% precision and sensitivity. That when launched would revolutionize the entire market in that specific space. So I'm very, very excited about, as Krayen told, very excited about the road ahead.
Bhargav, who are Krayen's 15 global clients that you have? Any names that we know of? And the integration itself, how long do you expect that to take? And then what synergies do you expect could be unlocked?
So one big customer that we had, interestingly, 5C. So they were one of our biggest customers. The other customers this space works with a lot of privacy information, so we don't disclose the name of the customers at this point in time. So that's. But having said this, the team comes with tremendous amount of expertise in AI ML, specifically on healthcare. We have deep expertise in data engineering, computer vision, natural language processing. The synergy predates the acquisition, so because we were already working in, and we're going strong. And as Krayen told, we're already having very early success stories already.
Right. Kalyan, let me bring you back into the conversation. Give us a sense of how many hospitals and diagnostic centers 5C currently works with across the 300 cities that you're present in, and where will the next leg of growth and opportunity for you come from?
Excellent question. Today, we're working with close to 2,000 hospitals and diagnostic centers across India, deeply integrated into their radiology machines. 5C is a deep believer in machine-led diagnostics. And the trend that we are seeing that we want to really double down on is compute as an architecture in biology today, right? We believe that the next leg of growth is going to be very product-led for us and is also going to be supported very deeply by our capabilities in ML and AI. And I'll give you an example. Our ML and AI team led by Bhargav and Kirti recently launched an amazing product called Copilot. And Copilot helps radiologists be faster, more accurate, and more consistent. And we were actually able to reduce, for a few specific types of scans, error rates for radiologists on 5C, which is already low. But we were able to reduce that by over 90% and improve a radiologist's throughput by 33%. Having these capabilities allowed us to literally go to some of the largest diagnostic centers in the country and be extremely confident to be able to take over their complete load. So we think that a lot of our growth will be product-led and very specifically now targeting some of the large hospitals and diagnostic centers. So our client base has traditionally been smaller single hospitals and diagnostic centers. And now with these phenomenal capabilities that we have gotten on our product, we're actually seeing that the largest hospitals and diagnostic centers in the country, some of them even publicly traded, are coming to us and telling us that that they need our help in order to manage their complete diagnostic workload. And what's interesting is that many of them are interested in going beyond radiology with us, right? And going into truly machine-led diagnostics. They want us to look at sequencing. They want us to look at pathology. They want us to look at PCR. And so this opens up a myriad of possibilities, but we're just getting started.
All right, Kalyan and Bhargava, both of you, thank you so much for your time here on Startup Street. We wish you all the very best in your venture going ahead. It is time for us now to take a short break, but up next, in our special series, the Unicorn Health Check, we are going to put the spotlight on India's D2C unicorns. That and more after this break.
Welcome back. You're still with us on Startup Street. Amid all the discourse surrounding chatbots, AI platforms, and automation in general, a group of school children in Chennai have built a machine learning tool to help children with autism communicate better. CNBC-TV18's Jude Sanath meets the team of 4 behind the innovation. Take a look.
At first glance, you'd think these kids were attending a routine computer science class. But Guha, Kamlesh, Jayesh, and Avnish, 11th grade students of DAV Boys School in Chennai, are actually busy improving on a software platform they developed earlier this year. A software that helps autistic children understand facial expressions. All it took was a laptop, some scratch code, and time spent training a computer to understand the link between words and human emotion. Children with autism face difficulties when it comes to social interaction and communication, thanks to a series of repeated thought and behavioral patterns on account of a neurodevelopmental condition. Typically, these children have difficulty while performing tasks considered simple by many, like reading facial expressions. Now that's where Avnish, Jayesh, Guha and Kamlesh's ideas enter the picture. They decided to teach a machine learning program how to read facial expressions, which could then in turn help an autistic child cope with deciphering these non-verbal cues. The idea stems from a simple yet crucial concept.
Initially, we created these 5 labels, 5 emotions, and then we went about forming prominent examples for these. For example, I really like the rain today. It is an expression of happy. So we put that under happy, so the machine clearly knows that if a person enters this sentence, it will categorize it under happy and help the autistic person express that emotion.
Over time, they kept categorizing new sentences under emotions like happy, anxious, sad, and more, while training the machine to understand them and emote accordingly.
Huge tech giants, when they make machine learning programs, they actually feed their program billions of data. But due to a time crunch, we didn't have that much of time to feed it that much data. We only were able to feed it 200 or 300 sentences.
The idea, they say, came from a 21-day project overseen by Chennai-based edutech platform Crew. The startup believes that with 2.2 lakh students on its platform, the possibilities for more such innovation are endless.
I couldn't be more thrilled that these are students who are 14 or 15 years old, who without being told what empathy is and without being told what it means to work for the sake of other children, have done it automatically, and technology has made this possible.
Back at school, these boys are far from done. They're now working on a Python version of their machine learning tool, which means greater accuracy and the capability to input, collate and process a lot more data quicker. For Guha, Kamlesh, Jayesh and Avnish, the project and its success has not automatically meant that they are actively looking at becoming tech founders. For them, it's still about using this technology to reach children who need it. In Chennai, Jude Sanat.
We've kicked off our special series called the Unicorn Health Check, and this with the aim to create a report card of our most valued startups, delving deep into what is working and what is not. So today, in that ongoing series, we're going to look at India's D2C startups. Aishwarya Anand is here with a roundup.
India has the third largest retail market in the world and is projected to be at $1.9 trillion by 2030. It is anticipated that the D2C market will undergo substantial expansion in the next 5 years, given the current e-commerce penetration rate of 8%. And increasing internet penetration in India that is expected to cross China by 2030 is further fueling the e-retail boom. As a result, consumer spending is expected to hit $6 trillion by 2030. So who is spending? A large and growing middle class and 40% of the country's urban population are the key demographic drivers of this consumption story. Which brings us to the opportunity. India's D2C sector is set to grow into a $60 billion industry by FY27. Personal care, apparel and footwear and grocery and gourmet are the most attractive D2C categories. With over 800 brands in this space with an estimated revenue of Rs 14,000 crore, the D2C sector has garnered over $2 billion in funding between 2015 and 2021. So, let's assess the financial health of the billion-dollar startups operating in this space. Licious became the first unicorn from the D2C food tech space in October 2021. The Temasek-backed company claims to have grown 300% in the past 6 years and is currently valued at $1.3 billion. The firm's net loss more than doubled to Rs 856 crore in FY 2022, even as advertising spend and other expenses shot up. While operating revenue rose 1.6x to Rs 683 crore, the growth was lower compared to the previous years. The company is now targeting a 50% jump in revenue run rate by the end of the financial year 2023. Rebel Foods, which operates over 450 cloud kitchens in India and other international markets, has so far raised $500 million and is valued at about $1.4 billion. The homegrown startup recently acquired the master franchisee license for global fast food chain Wendy's in India. The company, which turned a unicorn in October 2021, saw its losses balloon 55% in FY 2022 on the back of increasing expenses, which jumped 86% to Rs 1,429 crore. However, it saw its operating revenue more than double to Rs 859 crore. The firm even laid off 2% of its workforce to prioritize its future goals, which includes investing $150 million to acquire and scale food brands. Now, coming to the other unicorn in this space, the Good Lamb Group has emerged as the poster boy in content-cum-commerce play. If this wasn't evident from its unicorn status and 13 acquisitions it had made in the past 2 years, the firm is now looking to raise a new round at a valuation of $2 billion to consider more buyouts. While the impact of these acquisitions and fundraise will be analyzed after the company files its FY 2022 results, its growth has been underwhelming during FY 21. The company reported a loss of Rs 44 crore in FY 21. On a unit level, the firm has spent Rs 1.85 to make a single unit of operating revenue. D2C e-commerce unicorn Mamaearth, which filed its draft papers for an IPO last year, has been profitable in the first 6 months of FY 23. According to the documents filed with SEBI, Mamaearth recorded a restated profit of close to Rs 4 crore, revenue from operations stood at Rs 723 crore, And it is also important to note that Mamaearth turned profitable in FY 2022, recording a profit of Rs 20 crore. Purple entered the Unicorn Club last year and competes with the likes of Sugar Cosmetics, Mamaearth and Plum. It has raised over $100 million in FY 2022 and also acquired the Indian business of Faces Canada. The company's net loss almost quadrupled to Rs 204 crore in FY 22 from Rs 52 crore in FY 21. This is due to a sharp rise in its advertising expenses. The operating revenue rose 1.7 times to Rs 220 crore. Purple is also burning cash heavily as it spends Rs 2 to earn a rupee of revenue. Well, that's where the D2C sector stands at the moment. Going forward, omni-channel expansion, personalization at scale, sustainability and global thinking will gain significant momentum in the D2C space.
Okay, with that, it's a wrap on this edition of Startup Street. So it's a goodbye from all of us, but stay with CNBC TV18. The news and updates continue.